What's up guys and welcome to another video. Today I am going to talk about the YM E-mini Dow Jones Index and the trade I took today on the hourly chart. So today I am merely following the approach that I showed in my last video. Alright guys, so if you didn't check my last video out, go and do that first, but let's get into it. With this strategy, as I said before, you can easily catch higher time frame moves with no stress, easy profits, easy money. Okay guys, I am on the monthly chart at the moment on YM, and I'm going to start here to assess the monthly order flow. Alright guys, so going into the YM, we can see that we are currently in bullish order flow. How do I know this? Well, if we zoom in a bit, we can see that we have these highs up here. They are called relative equal highs. Why are they called that? Because they are relatively equal to each other, for those of you who don't know what that term means. Alright, we have this bearish monthly fair value gap that we have just traded through like a week ago, something like that, and now coming up and have taken up this low. So this respected the bearish argument for lower prices, and now we flipping bullish because the markets are telling us that we are going higher, that we are likely to go higher. So that is what we are going to believe. Now what do we do from the monthly? We go into the daily chart. Now what do we see on the daily chart? This is the monthly fair value gap that I showed you before. This blue box right here. Let's just make it a bit more precise. So as you can see, we closed far above it on the daily chart and are now slowly moving up here. So what can we spot on the daily chart, guys? Well, yeah, a daily bullish fair value gap. Price traded into it, completely respected it, closed above it, meaning bullish order flow. The structure is bullish. We are making higher highs and higher lows. Higher highs and higher low, guys. You see? Higher high, higher low, higher high, etc. Bullish order flow. Bullish market structure. So we have confirmed that we are bullish, right? So we want to look for some entries to go long in this, because we know the market has bullish order flow and we're just going with the market. Don't try and fight the trend. So where are price likely to head next? That's what we want to find out, right? So as I told you before, on the monthly chart, we have this relative equal highs up here. Boom. And where are those located? Up here. Look how many highs we have up here. And all of this, like these guys, is liquidity. So we got buy side liquidity hanging above this high, this high, these highs, this high, this high, this high. What are buy side liquidity? Why do we call it buy side liquidity? Well, when you are short, right guys, imagine I shorted the top here, right? I shorted right here. Where do I put my stop? I put it above the highs, probably, right? It's the normal thing to do. So what kind of order is that? That is a buy stop order. That's why it's buy side liquidity, because you're buying orders back, buying shares back, buying contracts back. This is a concept that can be used across all asset classes, guys, okay? Buy side liquidity above, sell side liquidity beneath. Now we are going into the hourly chart to find our long entry. Doing that, we can see that we are moving up. We've already pushed higher here, and we have this leg. There are no bullish P areas here. So what do? We don't enter. We wait for a bullish P area. Now, what is this? What do we see right here? This is my entry from today, guys. I spotted this bullish hourly fair value gap, and I watched it closely, and it was holding up. I entered. My risk was 18 points, merely 18 points, guys, and so far I'm up 41 points. And this has been the only futures index today that has been moving, and that is because that we are in this bullish order flow on the daily and on the hourly, so on, so on, so on. If we go take a look at the euro, I posted a video yesterday about the euro, what would happen to the euro. I was long, and guys, let's see again what happened. I entered on the 4-hour chart on this bullish P area, bullish fair value gap, and we hit PT. Of course, we hit this high up here that I targeted for a nice 5.7 risk to reward, guys. I am now in a new trade, because what do? I went to the hourly chart to get a specific entry point, and we pulled back, hit the hourly fair value gap and respected it, and now we are moving higher again, guys. So this is really effective order flow price action with extreme precision. We move right back up. So far we are still in profit and we are chilling. This can also be used in bearish examples and stuff like that. So for example, we can have a monthly chart where we are bearish, right, guys? For example, here, right here, you can see that we are bearish. We made a bearish fair value gap on the monthly, traded up into it twice, and closed underneath. That gives us a bearish order flow. It's that simple. And then you go to the daily chart, right? And you try and find an entry. What could that be? That could be daily fair value gap that gives you the bias for the entry. So let's say we have a bearish fair value gap here, right? Trade it up into it, close down below after it got respected, go into the hourly chart, see if I can find it. It's right here. There we go. So got this huge block, create a fair value gap, which gives us confirmation that price wants to go down. What do? Take a short position where it started. Where's our stop going to be? A lot of people place their stops above the highs, they place the stop under the fair value gap. I don't like to do either of those things. If you place it above the fair value gap or at the top of it, you can easily get stopped out. We don't want to get stopped out, because we see wicks, right? We see it wick up and down. We see that a lot of times, not here, but a lot of times it wicks above our fair value gap. So what do? We place it at the top of the first candle in the 3 candle series that we see. We have the low of this candle to the high of this candle, creating this bearish fair value gap, right? So what do? We place our stop on the top of that first candle that have initiated this fair value gap, the start of this fair value gap. And what do we target? Well, let's go to the daily chart. As I showed you many times before, we go to the daily chart, and yeah, it's right here. This is where we enter. Where is price likely to draw to? Well, we got this low right here. That is very low resistance. So you could target this for a 6-hour trade. If you're sneaky, you can catch the lows down here. As a final PT, that's an 11-hour trade, guys. An 11-hour trade I'm giving to you right here. And these things can be found everywhere, guys. Look at that. 0 drawdown. And you just get it. Every time you get it. And this can be applied everywhere, guys. Every asset class. You can give me any asset and I can analyze it like this, top to bottom. Just using fair value gaps and highs and lows, you can easily, and I mean easily, find a target that you can engage in, some price action that you can engage in. And of course, sometimes we have both bullish and bearish arguments in price in current order flow, and that is where we don't trade. Those are low probability conditions. That is also one of the things I am discussing in the paper that I'm releasing, in the ebook I am releasing soon, on fair value gaps and the understanding of them completely in depth. So guys, it's Thanksgiving night and the markets are closed at the moment. The futures, not the euro, but the futures are closed. The YM that I showed you earlier, the market is closed, right guys? Market is closed, as you can see up here in TradingView. It's a holiday, and it's the same tomorrow. So not any more action today. We're just gonna chill, and I'm just glad I can show you the possibilities and price using fair value gaps, highs and lows. So there you go, enjoy.